Record whenever you like. Oh, it's being recorded. Excellent. Well, hello. Welcome to this second lesson in this class. I hope you're all feeling well. You've been doing great work on your homework and in the chat room. It's great to see. Absolutely brilliant to see you working so hard. Great sign. Absolutely great sign. So in this class, it's kind of simple and kind of easy, except it's like learning to play piano in 3 easy lessons and 150 really difficult ones. But we're going to try and get through it anyway and show you the simplest way of marking up the charts and being ready to know where exactly we look for PA. So okay, let me minimize this a little bit. First of all, you can all hear me okay, I presume. Any yeses in the audience? Good, good. Glad to hear it. Excellent. Alrighty, we minimize that. Okay, where do we look for PA? Now, okay, the answer to that is on the next page. Oh, it's easy. We look for where the stops are. Now, that's just mean of me to say that, but it is kind of true. Well, in fact, it's exceptionally true at the same time. But we're going to need some clarification on that. Now, this morning I answered somebody's question somewhere on a forum, and that gave me the idea to put it into this class. And then once I put that into this class, I just kind of rewrote the whole lesson. So this is brand new. Okay, so on we go. We look for where the stops are. So this is a thing that I wrote this morning. Somebody had asked, why did this not work? Why did that left shoulder and that left shoulder not hold price down? What was my answer? Well, sure, this could have been a great place for a bounce, but supply-demand in the wrong place is just part of the propaganda campaign. Yes, these things are put up there to frustrate us and to kill the supply and demand traders and get their stops. Okay, so what have we got? This should have filled the orders above, but didn't. It was set up to be broken. Now, yes, there are a set of orders inside here, and that's all very well, but you're not promised anything big from it at all. I mean, if you're taught about supply and demand, you're taught that you're going to put an entry here, and you're going to put your stop above there, and then you're going to watch as price bounces all the way down to demand back again. And that's just rubbish. That doesn't always happen, and it's just so wrong to imagine that it does. Especially in this case, what we have is unfilled orders up here at the actual MPL of this. We've got that left shoulder there. We've still got orders inside there. And when this came down and made PA to the downside, it should have come back and filled those orders again. And the fact that it didn't means that they had set up a fake supply here. This fake supply is there to be broken later on. Simply to take the stops beyond it. So that's it. It puts tons of stops and breakout orders at the real significant MPL over there. So yes, what we are doing when we're looking at our charts is look for the stop losses. And in this case, it's very, very simple. This didn't come up and fill the orders there, so it's a risky trade trying to take a supply trade in there when you know that this didn't come and take the orders there. Now, when we're dealing with compression trades and the likes of that, we look for real compressions. Now, if this had have come up and hit the MPL of that, then as we're coming back to it, we'd be looking here for a pre-compression trade, all right, and that's totally fine, and that's logical, and it's a great trade to take pre-compression. But this isn't a pre-compression trade here. This didn't come and take the last set of orders, so we will ignore this. It's possible that we can get PA at these left shoulder levels here and come take a trade down to the next level, but it's not what we look for in the big picture. In the big picture here, we want this to break and we want it to come to the absolute MPL where it should have come in the first place. Okay. So looking locally, RS, which is SR, which is resistance support, support and resistance, it is great. But RS is not as simple as retailers think, of course. I think we've been through this already. Untrained retailers imagine that RS and SR should work to the pip. They think price should always reach it and that if it breaks, it's sure to continue. That, okay, if price comes, here's a low and it's done its thing and it's coming back up towards it, they think it should bounce there. And if it bounces early, it's no good, and if it bounces late, it's no good either. Very often, of course, price doesn't hit the expected high or the low, or it seems to break or break it before turning. It seems to break the low or high, whatever, and carry on and then turn around. Both of these pieces of PA may be perfectly valid SR flips, and that's because of the kink, the ever important kink. In lower time frame of that, here's there's far more information at hand. There's the low that we're dealing with, and then that low gets broken and we have a kink in here. What we didn't see in the higher time frame image was this piece of PA cutting across the line of the low. This is the kink. The kink is designed to confuse the retailer about the very nature of SR and RS. Price need not only turn at C. C is a great place for it to turn once it comes back, of course. We can get to the pip entries and they're brilliant because people or the ITs do love to show that SR works. So every once in a while they're going to make it work to the pip. Brilliant. Just like they're going to make Fibonacci levels hit to the pip sometimes so that everybody's screaming about how magical and wonderful they are. So price need not only turn at C, but anywhere between A and B is a perfectly valid SR flip. So yes, down here, price can just come up to here, not touch the true to the pip SR at all. It can simply come up to this kink and then bounce back down again, or it can break C and come way up into the MPL of this guy anywhere before B, and then we still have a totally valid RS flip. Good. Okay. Next. Boo, boo, boo. My mouse is a bit slow here. I wonder what's wrong. Maybe there's a hair in it. Okay, whatever. Right, so what have we got here? Still on the same subject. Okay, what have we got over here? We've got a low and then we've got an high. So this looks like the SR, so all clued in retailers see it and put their shorts at the MPL with stops above. They see that this is, oh, come on mouse, be very cool. You're a lot cooler than you are. Boo, boo, boo. Okay, it's working better now. So there's an MPL of it over here. Anybody who knows about left shoulders and the likes will get a trade in there, an RS trade, and they'll put it at that level when price comes back and the stops will be above there. Really logical SR flip trade. Seriously logical, and that's the way they think. That's the way the retailers think. Now the ITs don't really think that way at all. They see that the retailers think that way, and there's a very easy trap that they set for them. Now, okay, that's the monthly chart. Now, if we go into a lower time frame, we can see that our kink may very well not be this lower place here. It could be somewhere else. See this candle here? It's crossed the line and it's retraced back up there somewhere. So it's very likely that this is not our kink on the SR. That these guys can easily break and have their stops taken with no PA made. Now that's the great thing that ITs love to do. They love to engulf highs and lows without making any real PA. So this here is, it's kind of a fake to me. It's kind of in the middle of space. It has come after the break of this, but it is not the flag limit pertaining to it. So these guys can break. Where can they break to? Well, let's take a look. We'll move on. We're in the weekly. Down to H4. Here's our low line, and here's where it broke, and then it retraced all the way back up to here before it advanced. So our SR kink is actually very deep indeed. Okay, good. And these guys didn't come close to filling it. Once price made its advanced down there and retraced there and came to our next level, surely price should have come deep inside this and taken out the orders, but it didn't. Now later on, once price gets down to the demand or whatever it is it's going to, maybe it is going to break the levels below on the monthly chart, then it can come back, or even before it breaks them, it can come back and it can break these guys without making any PA. So here we go. So what have we got? Into the H1 on this, we look for our levels. We always look for our levels in these zones. So there is as far as price came back to, it seems, in our original move after the break. But it didn't come back to fill any of these orders here. Here's one left shoulder there, and it lines up with another left shoulder here at pre-compression here. Pre-compression, where we've got left shoulders, is a very strong place, really, really strong place, and that could be a great way of letting price come up to around these highs on its on its way back. Maybe then it'll start trending downwards, give lower highs and lower lows once it's gotten to this level, just to show that this is a lovely resistance and this lovely resistance is working, and then break those guys, take all the stops above here up to maybe this level, that's the first level, and there'll be a million breakout traders in here, of course, as well. And you've got the stops, you've got everybody here buying at you. And with everybody buying at you at a place that you should be selling, you're doing good business. Now, of course, here's another one. There's another left shoulder, and that ties in with the end of this compression over here. Because compression's made of two places, really. It's made of pre-compression, and then you have the MPL of the compression. So once you get into a compression, you're tending to go to the MPL of it all the time. The MPL of this compression lines up really nicely with the left shoulder here and a couple of left shoulders here. So it's good for me. Really, really nice. And then, of course, there is for me, the really big MPL on it is this left shoulder here, which ties in perfectly with that low over there. And the more hits that we've got, the more times price bounces off a particular line that we are looking at, the more credence we give it, the more strength we give it. And if something has always been ignored and price has sailed through it a million times, it's not so strong. But if it does tend to get respected a few times, it adds more strength for us. So we have a left shoulder. We do have a set of orders inside here. Here's a big rally base drop. So there are unfilled orders in there. I mean, once price came down here, it should have bounced back up, but didn't. So there are clean orders inside there, and it ties in really nicely with this one. And of course, we could go into lower time frames as well and find even more orders inside there. Maybe there's a left shoulder at this level tying in with that for an absolute MPL. Very possibly indeed. But that's it. We have our RS kink, which is much, much bigger than we imagined, and our best RS trade is not from this line. Our best RS trade is from around this level here or that level there, where the last sets of orders are in that kink. So here we are. Here's our support. That is not our resistance. Absolutely not our resistance. Our resistance can happen anywhere inside here. So the ITs can bring price above what the retailers think is SR. They can bring it up above here without creating any real PA at all. And as I say, making what looks like PA but isn't PA is a brilliant trick that the ITs play, and they do it all the time. So we look for the invisible sets of orders, and we look for the invisible kinks, and the less visible they are, the better. Because if this was really obvious, if you could see that this had come up really high there and this was a big, these highs had come all the way up here, people would be less inclined to actually have their stops at this lower level here. So yes, this is gorgeous, and it happens all the time. As I say, they make these fakes simply to be broken without making PA. So there, onwards and upwards. So RS kinks are my very favorite places to look for PA. For me, they beat supply and demand any day of the week. I do love them, and there's good reason I love them. Because left shoulder kinks are essentially RS kinks as well. Here's a few left shoulder kinks that we've got, and with these things, there's a left shoulder there, so that is where we held price down, and then up over here it held price up again, held it down here, held it up here. You know, it's brilliant, and then we get the bounce over there from that level, and it works. Here again, we've got price held up, we've got price held down, we've got price being held up again. Gorgeous. Another left shoulder, but it is still resistant support. Here's another one. Price held up, price held down, price held down, price comes back up again. Same again. You won't really see the flags in here at this scale, but you can imagine that on top of there, the price went up through, it came and bounced off it a couple of times again, and then went down through. Same as over here. There will have been the same base inside that. So it's prices held down, prices held up, prices held down, prices held up, prices held down. And then it comes over here and it does its thing there again. Same here, just you've got price held down, price held up, price bounces down. Price held down, price held up, price held down again. Gorgeous. So left shoulders are RS. And our left shoulders are, you know, they're the holy grail to us. They're just beautiful things the way they work. And they do work because it is support resistance. So that is that. It's the same thing all over the chart. You'll see it absolutely everywhere. So, okay, in marking our charts, our RS and left shoulder kinks are vital. They don't all cause reversals, of course, but higher time frame kinks can be very small, allowing us to take monster trades in lower time frames, which often seem to be taken, or which we often seem to be taking in the middle of nowhere. Very simple thing. If we have ourselves, let's say our monthly, we have a monthly left shoulder, and over to the right of it there's a kink which is only 10 pips wide, then we can be looking in and see that we've got our kink there, and we could be watching it in M1 and we see, okay, there's an M1 kink which is actually 10 pips wide, but it's actually a monthly kink, and we've got a 10 pip stop loss on something that can move for 1,000 pips. So these are gorgeous, absolutely gorgeous. We get really fantastic monster trades at higher time frame kinks, which are absolutely tiny, utterly tiny. Okay, onwards. So before we go to the chart, let's list the places we'll mark to await PA. So we've got left shoulders, of course, we will mark and wait. At left shoulders, we'll put our kinks there. Pre-compression, before we get to compression, the MPL of the first high or low before we break into a compression, that's a great place to look for it. RS, of course, and then here's one that most people don't realize. It is where we have actually broken into a compression in the past. That can be an absolutely fantastic place to look for price action, because the compression is made of two parts. It's made of the pre-compression and it's made of the tip of the compression. So if that is a PAZ, if it's price action zone all the way through the compression, then why should the tip of it be the only place that we will look for a bounce on return? Surely what was the pre-compression, where that gets broken, is very strong PA in itself. Of course it is. So the latter three are best taken when aligned with left shoulders. Absolutely, we want to have our left shoulders there, and we want to have as many of them as we can, so that we have an idea that this level worked many times in the past. Okay. Right out. Now that should be the first thing. I hope we're not on a loop. I haven't lost anything. Oh yes, we're supposed to go straight into the charts now. Yes, yes, yes. Okay. Alrighty, into the charts. Here we go. Okay, so here's a chart marked up on the monthly, and we'll go through it. It's not complete because there are some things that I'll be wanting to show you in it, and we can complete it as we go. So right, when we're looking for places to trade, we go to the highest time frame we possibly can, first of all, and get that marked off. And it's as simple as pointing out what it is that's jumping out at us. So, of course, simple, there's highs and lows. That's great. They're the easiest things to find. But we go as far left as we can see. And we start looking at the highs and lows and what's breaking what as we go. This is here. It's a nice little flag that broke it up there and retraced to there. So the high and low of this are important. Then this got broken up there and retraced to there. So the high and low of that are important as well. This one here is inside that one. So it's of lesser importance because it didn't create any PA at all. So it is of lesser importance. Now, that comes important when we start looking at our compressions as well, because we've got to be marking our compressions. Here's a compression in here. Now you might think that this is a compression and that this is what broke into the compression. That might be the case, but for me it's not so strong, because breaking this is good, certainly, and maybe it's an indication the price wants to get through. But this here isn't in itself, on this scale, any particular kind of PA. It neither broke the top of this or broke anything else. It didn't break anything down and it didn't break anything up, so it's not so important. Now this one, however, did break this up, creating a new piece of PA, and for me the break into compression is when this is actually broken here. Then we're getting into this zone below and we're going to travel through to the end of it. And as you can see, what I do is where we're broken into a compression, I mark it. Now let me just get in here. There's a lot of boxes here, so it's hard to see what exactly is what. But on this one, I just want to get onto it before we leave it. Boo, boo, boo. There's our compression. There's where we broke in. So what have we got? In the weekly, we broke in somewhere inside this candle. Let's get into the daily. Boo, 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 boo. Oh, okay, there's a compression there. There's the low. In the daily, it happened in this candle. Now I haven't got H4 on this, so I don't know how far price retraced once it actually broke this. So I'm not sure where the kink is exactly on this. And when you're not sure where the kink is, you've got to put in the entire candle. So I had to put in this entire candle here. It's not terribly accurate, but it is all I've got to work with. I haven't got the H4 or anything there, so I can't find exactly where the kink is. That we have to do. We have to leave it in. Alrighty. Now, okay, here is another one. Let me go back out to the monthly again. Here's a left shoulder over here, and this kind of lined up with it. That's a BSC that is there. I'm going to get into BSC, maybe not in this class, but I'll do it again. I'll absolutely do a little lesson on that because it's a wonderful thing. But right. We've got this left shoulder over here, so we've got to get our kinks marked on that. Well, you could say that all of this is a kink on it, and all of this, in essence, is a kink on it, and it's a very big one. But it also has a number of other kinks, because we can have a to the pip kink, which is where we bring this right the way over, and we could find an M5 or something like that, little rally base drop in there, crossing that, and that can be our to the pip kink, and they can be extremely strong. But for now, we've got all of this, and then there's another kink as well. This is the big kink. Here's a smaller kink, and yes, there will be other smaller kinks in there as well, and we can keep going down into lower and lower time frames, finding the actual kinks on these things. But here is the semi-big one, and we'll go and take a look inside that. Boo, boo, boo. So there's our left shoulder, here's our kink. Now we look for the orders in there. Well, we've got a compression going on over here, which is fine. Over here we have the to the pip, which is there. Now this has, for me, pretty much taken it to the pip already with that one, so I'm not in love with that. What I would do is go for the pre-compression trade over there. There are orders still in here. I mean, price came, made two highs over here. That was another BSZ, another BS trade. Very simple stuff, and then price came down, and it should have come back and filled these orders again. Just to, you know, to do the Quasimodo, but it didn't. So those orders are still clean, and that's still really nice. Up over here, we've got left shoulders in here. They've been taken somewhat. So in here, there's another left shoulder there. That isn't clean anymore because this took it. You've got your left shoulder level there, and you've got this here. Now, the fact that that came and took those orders doesn't mean necessarily the price is going to break through there and get all the way up and away into space, but it's less likely to hold price down since those orders have been taken. So it is weakened in there. Okay, so that is that. So that's this left shoulder taken care of, and the kinks on that. So there's my first place that I'd want to be looking for a trade on it. Also down here as well. No reason why we shouldn't be looking down at this level here. There's another BS. You got a low and another low there, and then price came down and broke it, and then came back up through again. So there is the chance of bouncing price off that kink to the pip there. Okay. Where will we go to next? Well, we're in this arm, so we'll stay in this arm. Okay, there is a flag that's going on. Oh, now hold on a second. Before we go from there, I want to show you something. This isn't all the information that we can get on a pair. There is more information than this to be had. And where we tend to go is a place called FX Top. I don't know if I've told you about this already, but if you go to fxtop.com, that's what it's called, yes, you can get the entire history of a pair. So this one here goes back as far as 1953 and carries on to present day. So in marking up your charts, you really want to actually get into FX Top because there are things that may not be in your charts in modern times. It might not have gone back this far. I mean, this could be very important here. That was very important there. You see how well it worked in the past. You know, if we've got information like this, at our fingertips or at our disposal, we should be using it to find our levels. Now, I didn't use this to draw up my Looney chart that we've got there, and that leaves me at a massive disadvantage. I mean, let's say, you see, this wasn't there. This wasn't there on our chart because our chart didn't go back that far in time. So on this here, if we're looking for an MPL of it, the only information that I think I have is this. And I don't even know if we've got that high over there marked. So if I'm drawing my MPL on this guy, I've got to draw it there. But what about this that happened in the 1980s somewhere? We've got that high over there, and that is a perfectly significant and perfectly respectable place for price to or as a left shoulder on this, it is a perfect place for price to come back and bounce. Absolutely it is. So we've got to keep these things in mind, get as much history as we possibly can to work with on these. So okay, back to our chart again. Take a little drink because I'm getting parched already. Only half an hour in, I'm getting parched. Okay. Righty. And that level there is somewhere around here, and it is above there. So we might be missing out on something really important there. So we have to be getting as much information as we can. So FX Top is great for it. So okay. Here's another, if we haven't dealt with this yet, here is another flag limit. Perhaps it's a flag limit now because we did have another high higher than this, the one from FX Top. So it really is worth our while actually investigating these things and finding out what the deal is, where exactly that price is, and have we got it marked. So okay, back away. So this may or may not be a flag limit. It certainly is one relative to this, but maybe the high of it is below the other high that is there on FX Top. So we have to work that stuff out. But for now, what we've got is this one here, and we bring a trend line over. Now these things can bounce price to the pip, or they can bounce price to the zone. So it's really good to actually keep these trend lines running across into present time. So that, with the high of that, we look for a kink on that, and the kink is pretty obvious here. We don't need to go into low time frame. Well, we need to go into low time frame just to double check it. But it's very obvious here anyway that that is our kink on that, so we'll mark that. Now also, just have a look at this. This is 1997, I believe, or 1998. And then in 2016, price comes back to it. Was it 2016? I presume it was. Comes back to it, and it bounces there pretty much to the pip. So yeah, what I'm saying about keeping these trend lines, straight flat trend lines here, keeping them to the pip can be brilliant, because here we got an engulf up of this guy, and anybody who saw this getting engulfed will have thought, okay, price has now engulfed that, it's going to go all the way up here and it's going to fill this range, because they weren't paying attention to this guy over here, which looks like it to the pip turned price. Gorgeous, absolutely gorgeous. And that could have been, what we could have had in here is a little M5 kink crossing that, which could have been 5 pips wide or 3 pips wide, anything like that. And we could have seen that if there is an MPL in that little kink, price is going to bounce there. And we can take in an entry with a totally insignificant stop on it, and then we can get price bouncing back down and bouncing back down to these highs over here. So let's imagine that there's a 5 pip kink in there, and we can very easily bounce back down to where we broke this, and that there is 500 pips. So you're getting 100 R on that very easily. And these are the trades that I absolutely love to take. I do often make, I did often take trades that were in the middle of space and they looked like they had no bearing on anything, but they were very often just because I had these things marked in the past, and they make you just look like a trading god. But all it is a little bit of preparation. Have a little bit of preparation in, mark your significant levels, and then you can trade like a god all you want, and people think you're absolutely freaking brilliant. You're not. You're just doing really simple things in really simple places. Easy as that. Okay then, so that's that one, and then this gets broken up by this one, retraces back to there, so the high and low of this are important as well. Start with the low, that's over there. We should really be finding the kink on this. Now this has already been broken, so it's not the most significant thing to find the kink here, but I do still drag that low over here and find the kink near the recent or most recent high or low that it's passing. So here's the high that it crossed through, so I do want to find the kink on that. And it is as simple as going in here into the low time frames. And what have we got? Not only have we got that one there, but we've also got this one there. So that gives added strength to this place in here. So we can go into the weekly. Boo, 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 boo. And I can easily get lost in charts. So let me just in the middle of this shove in this, and just as a finder. Beep, boop, boop, boo, beep, boop, boo, beep, boop, boop, boo. Make it a color I'm not already using. Maybe make it a bit fatter. Boop, 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 boo, boop, boop, boo. This is only a temporary thing. I absolutely hate full horizontal lines on a chart. You should really, this is just a little bit of advice, you should really avoid putting in horizontal lines on a chart that run all the way from left to right. If you have an area of significance, you will want to know where it was that you actually found that area of significance. So if you have a line like this running all across the screen, you won't know exactly what it is you're dealing with. Maybe, okay, it is a little bit obvious here, but sometimes it's just not that obvious at all. So yes, if you are putting in a permanent line, make sure you're only putting it in from where it is that you focused on it in the first place. So it's this one, so that is the beginning of your line. You don't bring your line anywhere to the left of that. You simply go trend line or rectangle or whatever it is you want, but don't put in a full line all the way across your chart. So okay, I want to go in here. Okay, so here is that, and there is that. Here is where we're crossing. So we have a couple of significant places in here, and there's the kink on it in the daily. It came down here and retraced back up to there. So okay, that is the daily kink on it. Now what we can do as well is we can find lower time frame areas inside that kink for the best sets of orders. Now, right, here is the kink. So okay, right here we have a left shoulder here, and it is at supply. And remember, supply works sometimes, demand works sometimes. So that could be a really, really great place to actually take a trade, right at that left shoulder there. These guys did not come back and take it, so there's no problem whatsoever with letting price come back up to this level again and making this resistance work. Now this is the BSC that I'm talking about. Let me just show you the BSC right now, then I don't have to do another lesson on it later. Let's say, here we go, let's say price is coming back up to these places. Now we now know that up here there are unfilled orders, and that those orders will ultimately want to be filled, and they get left behind for a reason. This didn't come back here for a particular reason. Now that was in 2015 that this was created. No, sorry, 2006. Okay, the beginning of the year this was created. And you'd imagine that it would have come back and filled it up straight away, but it didn't. It's now a year later and still price hasn't come all the way back up to there. But when it does come up, you can imagine it's going to do something like this. It's going to start, or they're going to start. Now, they will start swapping out orders as they come towards it, or else they'll just push straight up. Now, if they push straight up, they're going to have to swap around their orders after the push. So they'll make something of a can-can, maybe push straight down and then compress back up to that level again, start filling orders. But what you will find is they're very often going to do something like this. They're going to make this resistance work. And they're going to make it look like we're in a big flag here. And that's great. So what have we got? We've got that and then that, and we're starting to trend downwards. And now that makes this resistance look all the stronger. It is a beautiful resistance, and what is it doing? It is working because we're now making a downtrend from it. So of course your retailers then are going to start on the retrace back. They're going to start selling there, and they're going to start selling there, they're going to start selling there, they're going to start selling there, and they're going to feel really good about themselves because they're on a downtrend. So that's it, and now they're put under pressure. Ooh, serious pressure, even more pressure now once this is starting to break. Of course, there are more people who saw this already, so they're actually in right there at this resistance. And what do? They simply they break it a little bit like this, and then they're going to take all the stops and get breakout traders in there. So, so why do I call it BS? Why do I call it a BSZ? Well, I call it a BSZ because it's a zone, that's the Z, and then there's a lot of BS created around it. And the BS stands for breakout and stops. Here, yeah, you thought it was something else. And it is something else as well. I mean, it is an absolute lie, and it is BS, what they do here at these zones. So they create a false, in this case resistance. It could be down here, and they'll create a false support, all right? And they're going to show that this is a very, very strong resistance or support. And then they're going to start trending away from it, and then they're going to come and they're actually going to take it out, just to take the breakout traders' trades. The breakout traders here will be buying really high, and the stops from all of the sellers, the downtrend sellers, the stops from all of them are up here, and they have panicked. So now there's tons of stops in here, and what they tend to do is bring price up to the actual last set of orders, to the MPL. And there's so often, more often than not, there's a very simple trade right back to the kink of the BSZ, to the kink of where this got broken. So when you see something like this, when you see two highs being created like this, expect it to break, especially when there are orders above which should have been taken in the first place. So you can very easily take a trade from the MPL back to the kink of the BSZ. That's the most simple trade you'll ever take in your life, and it happens over and over and over again. They just create BS. They get the breakout traders, they get the stops, and it is BS. Simple as that. That's the BS trade, and that's what you'll expect here. So this is gorgeous. This has actually two monthly levels in it, two significant monthly levels in it. Right at one of the MPLs of this, of course, there's another MPL on it there, and that ties in really nicely with this particular monthly level, so that makes it very strong. Extremely strong. Okay, dump these drawings. No, come back. Boo, boo, boo. Dump the drawings and go back to that. So that is those levels marked out, and we have our kink on it, and we have our MPLs and blah, 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 and we're good to go. More monthly levels in there, and we've got the kinks worked out on it too, and we've got to find our levels. We could have, let me see, there's the bottom of that kink there. That could be a good place. There's an MPL over here, and if there's more history as well, if there are more places that bounced and worked really well, it all adds to the strength of it. So these are really good places. There is the MPL of this guy right over there on a monthly level. Now, can you imagine you're on an H4 chart there? There is nothing inside here. That's a really, really tiny little zone there, but it's a to the pip entry on a monthly zone. You could get in there with just a couple of pips stop loss, and you could get a monthly trade from it. You could get a real monster trade. So, okay, onwards. Another drink time. Boo, boo, boo. Right. So we've done that guy. We've done where we broke into the compression. I don't care so much about what's inside a compression. not so much at all, and I don't care about the other side of a compression so much. And what I do care is about flag limits being created and destroyed, and this is a flag limit being created. There's no flag limit inside there on this scale. Now certainly, if we are taking, let's say, H4 trades in around this area, we will be watching areas like this and like that. We'll be watching them like a hawk. They're really, really powerful places on low scale. But if this is, let's say that's a daily level there, and it's a very significant daily level, it broke into this compression here, that's great, it's brilliant. So on the daily charts or whatever, we could have this marked in. Now what we don't want to do, and this is an important thing, we do not want to have our H4 and our daily levels and whatnot marked on our monthly chart, otherwise we'd never be able to see a thing. As it is, this is pretty crammed with stuff. There's an awful lot of information in here already. So if we start cramming H4 and H1 and daily stuff into it, you know, we will get analysis paralysis. There will be nothing that we can do. There's just too many lines on the chart and too many boxes. There's nothing that we can actually work with. So we keep it simple. If we are looking at levels in a particular time frame, we will only mark those levels in that time frame and have them visible in that time frame and lower, but we do not have them visible in any higher time frames. So okay, that's another little tip. So what have we got? We've got this one done here, then we've got the low of this, and we should be finding, oh, we did that already, and we found the kink over here, so that's important. This over here didn't make any PA as far as I can see. It didn't break the low of this and didn't really do anything back over there, so it's not terribly important. But what it can do is add confluence with something like this over here. We'll find the kink on that, and if the kink for this is the same kink as it is for that, then we actually do have that little bit of extra strength in there. So yes, we do mark things like that just for confluence and for added strength. This one here did actually break that low. We'd have to look at FX top to see if it actually broke a significant low. All we can see here is that it's the furthest left low. It might not be a flag limit in itself. There could be a low. I mean, this could be just a compression all the way up from somewhere which is actually lower than that. Maybe the actual low that that's coming from is lower than this, and we don't know that that's a flag limit. So we got to check these things with FX top. But if this is all the information that we've got, then what we're going to do is mark the damn thing. So we've got the low of it over here, and we bring that across. So that there ties in with a little low inside there. There's a compression going on in here, and we can go and find inside here, find the little kinks, find the clean orders that are there tying in with that level. And it could be very important. Here it also had added strength at that level again. And you know, if we're drawing our Quasimodo levels, there's a left shoulder there, there's highs over there, we had a drop down there, and we came back over to that left level or left shoulder level again and turned there to the pip. These are great, absolutely great. And we could turn price again when we get down to here. So I'm going to take a look inside there actually. Yes, I am. Because I'm coming from this way. Yes, this is higher. You could do a top-down analysis or you could do a left-right analysis. I think I tend to actually do a left-right analysis on these things, so I'll keep working that way. Over here. Okay, so that left shoulder level worked anyway. It brought price back down to this area again, over here to this left shoulder level. Perfect. Absolutely brilliant. But we're going to look inside here for some orders. Boo, 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 boo. Boo, boo, boo. Here is where they are. Here we've got a compression going on over there. That's fine. Ba-ba-bum. Okay, so here are those levels. What have we got? We got a compression going on over here. Now we're going to look inside here. We've got our first engulf of anything there. This held price up, that held price down, and here's our first engulf inside there. So over here around our monthly levels, we do seem to have some sort of a Quasimodo level. Oh, here's one actually there. There's after our first little engulf. That could be an important place. boo, 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 boo. So we'll mark that off. Now, okay, what happened? Price came up through this compression over here, got into this guy, bounced back down, and took out that left shoulder there already. See, these things are important. They're wonderful. So that has been significantly weakened now, so I'm not quite sure that that is going to be able to hold price anymore. So we go and look beneath it. Over here, places like this, they're great as well. That's nearly invisible altogether. That's nearly invisible. That little low inside there, really it's nearly gone. And it is right on this monthly level as well. And what have we? We've got lows amongst it. Let me see, another low inside there. Now that got weakened again. This candle came down and took it out. But this is a daily chart, so there are quite a few pips in there, and maybe that is a really good place to actually be looking for trades. So with this, I'm going to leave that as my level, and I'm just going to boo, 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 boo. I'm going to copy the upper line of it, copy that, and then I'm going to drag it over into modern times. Where the hell are you? Yeah, I'm going to drag it across there. And because I dragged the top of the rectangle away, I have now lost exactly where the top of it was, but I've also copied it, so I'm good to go there. So ba-ba-ba-bam, and paste. And that's it, back in position again. So we've got a very skinny little monthly level there, terribly, stop it. Got a terribly skinny monthly level there, and it's great. It could be really good for taking stops below these lows over here, back into there, and kaboom. That could be great. Now, okay, that's the two of those taken care of, and that's their kink taken care of. I think we actually have a higher kink in there, but you guys are good at working out kinks here, so I don't really have to do that for you. Good. And down onto here, this guy got broken down over there, so that could be important as well. And yes, that is there. See a little flag limit over there. Might have been significant. And back over to here, that actually ties in with the left shoulder on here, giving this left shoulder added strength for any time price wants to come back into there. So that actually tells us that we have more reason than just this left shoulder to actually be thinking of trading at this level. So into there we go. Let me bring this over. Otherwise, I will get myself lost. Let's look for that. And daily in there. Boop, 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 boop. Okay, there's our level. That's trend line. Oh, stop it. Be cool. Come back. Boop, 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 boop. And yes, Pip is extremely quiet this evening, but it's dark. It's the darkest day of the year. Oh, by the way, happy solstice to everybody. Boom, 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 boom. Horizontal line, good, and just, oh, solid, we'll just move it out of the way. Okay, so there we have a little monthly level. What's going on with it? Are there orders to be had here? Well, there are multiple lows around here. There is the possibility that we could be bouncing off there. Ooh, boom, boom, boom. So there is an utterly tiny zone, really, really tiny zone, and that could be enough. Stop it. Okay, just come away. Boo, 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 boo. Copy this, boo, 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 boo. And make it nice and easily draggable away. Boo, 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 boo. Boo, boo. Drag that away over into modern times or into the future. And then boo, 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 boo. Now we do have indicators that will bring these things across, and really I should be using them right now. Okay. Tip, you can change the ending year of the rectangle and it keeps the same. It's true, you know, it's absolutely true. But you know, the best thing to do is actually put on rectangle extenders, so I'm just an idiot for not having one on. I do actually have one on, but for some reason it's not working for me, which makes just difficult. I'll get it working though. But yes, putting on an extender to bring all these things, or to make sure they all come over to current price. I mean, it's vital. It's a really important thing to do. Okay, just go away. Deselect. Boop, 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 boop. Okay. Alrighty, so we do have a really tiny little level there, and it is a monthly level. Is it a monthly level? Well, yes, it is. It's at that there, but this is the best set of orders in that monthly level there, and that could give us a trade from there straight back up to here, or it could actually fill this range here because we love symmetry. We absolutely love symmetry. So we could get a bounce from there back up to these levels again over on this side, and that gives us perfect symmetry as well with this because we love symmetry. See how there's a flag there, and pretty much the flag is replicated over here almost perfectly again. And we could be doing that again. We could be bouncing back up there and filling that flag range once again. Symmetry, wonderful, mwah, beautiful thing, love it. Okay. And next then we've got this little one here, and we've got to do the same again inside there. Now this could be a flag limit. We have to look to the FX top to see what exactly it is and how significant it is. If it did break something, if there's a flag limit, if this is a flag limit, and then this tends to be the break of the next flag limit, then this is a flag limit in itself and it's important, so top and bottom of it are important. So this one over here, this could be vital. This one could be absolutely vital depending on the historical significance of this one. So I want to bring the top over there and see what we've got. Boop, 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 boo. You come over here. I want you. Yes, that's what I want. Hi, Pip. Are your feet dry? Yes, they are. Come on up. Come on. Up, good boy. Alrighty, so we're here. Boop, 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 boom. Now, okay, this is a little bit tight. I'm going to actually have to pinpoint it. Oh, I have got to pinpoint it. I've got it over there, I believe. Yes. Okay. Boop, boop, boo. Horizontal line, get you out of the way. Now, this line is at 1.18732. I just want to see where it was crossed to the upside. Boop, 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 boop. Okay. Oh, stop it. You go away. Okay, so the high of this is 1.18739. Right, this is 1.17. Okay, so it crossed here. So what we have got is a monthly kink, which is here. That crossed it, and then the depth of the retrace after it is to here. So gorgeous, absolutely gorgeous. Why can we not come and break these lows here straight down to this other monthly kink inside there and have a whale of a time? Take out all of the stops that are there, take out all the breakout traders right into here, and yes, it's lovely. It's just fabulous. Inside that level, then we can look for the MPLs inside it. We look for any left shoulders that we've got. There's one. Maybe they're lower in lower time frames there, but that's brilliant. That's just beautiful. Boo, 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 boo. And okay, no, that's not it. Okay, and boo, boo, boo. Right, okay. Take your advice on this one. And it's gone. Yay. Okay. Stop it. Go away. Go away. Right. So that is the next one taken care of, which was, I believe, this one. Okay, now this over here has, this low here, it has to the pip kinks, but it's also got a gigantic kink over there. And any of these things can work. Now, if this is a significant flag limit going on, having broken an upper flag limit, no, having broken a lower flag limit to the left, if it did retrace back up to here, then this part of it is significant, and we will find the kink of it. Now, there are kinks inside here. There are tiny little kinks, which are pretty much to the pip kinks, but there's also this very big kink here. And as we're saying, same with RS, the left shoulder is exactly the same as RS. If we're looking at the kink of this, it can be this one. This is an absolutely massive kink, and we could get a bounce from there which doesn't go anywhere near it. The bounce from there actually happens here at this, at the extent of the kink on it over here. So we could be getting a left shoulder bounce from this over there. So it's good to mark this in and know where it is. And it seems that we have our orders in there marked already, which is a great thing. And then here's another lower one. Maybe this is significant. Once again, we need to have more information from the left. But look, it was significant here. Like to the pip, we got a bounce on it. We could have also had other bounces inside there, but we also see that there are orders inside here, and that can be a great place for a monthly bounce. Now we've got the downside of that, and that's great. This is pre-compression over here. So at this monthly level here, we're also pre-compression, and we love marking off pre-compression as a place to be trading. So yes, there are orders inside here. This guy should have come and taken out those orders once it went and engulfed up. It really should have come and take them out, but it didn't, so those things can be left for later. So we might have, oh look at this, see the way this bounced off there so nicely. There's other places where it will have been held up and down so really nicely. So we might actually have it to the pip entry there. Really might have. It could be just perfectly there, or it could be somewhere that little bit lower. Here is the final kink on it here, and the MPL of that is here. So the MPL of that is there. It looks like it might have been weakened by these guys coming and taking it, but you know, it still might work. 23. Yay. Off you go into the future. Bless your cotton socks. Alrighty then. Now, which one were we dealing with? We were dealing with this one. Now, of course, there's another kink on it here, and it could be any of these bloody kinks to the... just got to find the very lowest low on there, and it could be any of these kinks here. So all of these guys could be important as the main kink for it. But here's here's the to the pip, and there is kind of close to the pip, and they're just beautiful places. But over here to there, that could be another kink, and the kink trade on this, it could be from this MPL over here. Really good. So let's shove that in. Ooh, boo, boo. And then that is at the other end of this compression. Again, it's at the, oh, hold on a second. You stop that. I want to go deeper. I want to go down to there. Yes, that's much better for me. That's really much better. Ties in with this over here as well, which is great. Now it has been weakened by these guys again, which sucks a little bit, but still, I'm going to put it there because it can bounce price again. 2023, it's a good year. Let's hope we're there for it. Righty. So, okay, I've got no more information than that. What have we got over here? We got a left shoulder here, and that's been significantly weakened by that, but maybe there's another little kink to be found in there. Got a left shoulder on there. That could be a great place. So, okay, when I am drawing up charts, I don't do any more than this. I really don't do any more than this. I will do this on the monthly, and then I will do it on the weekly and on the daily, and down to whatever time frame I like. But as I say, oh, hold on a second, what have we got here? We didn't do this one, so we've got to find the kink on that. Now, there are a few little areas in there. I go pre-compression in here. Maybe I should leave this open for you guys in your discussion about where you want to put it. This actually bounced almost to the pip there already. So you can see that having these weekly, monthly, higher levels marked in can explain an awful lot of bounces in the middle of nowhere. Really, it can explain an absolute awful lot. So you've got to be marking these things up, and you've got to be very careful about them. Like this low over here, who would have thought that it was going to create a doji over here? But you can see that this pin stopped pretty much to the pip on it. Same as this guy stopped pretty much to the pip on it. They're very important. They're very, very important places, and they can bounce price like crazy again and again and again and again. So there we go. We have here the monthly, and for me this monthly is done. I can do the weekly then, and I'll do exactly the same thing with all the information that I've got. And if I'm taking weekly trades, of course the best places that I will be taking weekly trades are where I have a weekly trade crossing over with a monthly trade. If they're both in the same area, if they're right on top of each other, then you've got weekly area and monthly area, so it makes it very, very strong. And I love to take H4 trades from monthly zones and from weekly zones, because why wouldn't you? They're phenomenally strong, so we should have them all marked. But as I say, do not mark yourself any levels on a particular time frame that shouldn't be seen on a higher time frame. If you do that, if you mark, let's say, H4 levels, make sure you can only see them on H4. Let's show, you know how to do this anyway, but let's say this is an H4 level and not a weekly level, then boop, 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 boop. We'll make sure that it's only visible on H4, H1, M30, M15, M5, M1, and we never see the H4 levels on the daily or the weekly and the monthly because it's too bloody messy. So simple as that. Now, I've actually been talking quickly and non-stop for an hour, and I've said everything that I need to say on this. I mean, yes, it is a very short lesson and a very easy lesson, and it is learning to trade in 3 easy lessons, and next come the 150 really difficult lessons of getting all this stuff to actually sink in, and that is down to you guys as individuals to mark up your charts and have them looking right, get in everything, mark in your kinks, and then it's up to you then to be watching out for the PA that you get at these levels. You can work as a team at these things, and you can really work out the best places to be taking your trades from. So do we have any questions? Let me widen this thing up. Oh, maybe I've missed some chat already. Hold on. Oh no, I haven't missed any questions. Good. Okay, any questions, folks? I'm not familiar with the word pre-compression. Alrighty then. Okay. Fine. Maybe I should just draw it. It is kind of scattered all around RTM, but fine, I've no problem working out this thing with you. New image. Yeah, okay. Okay, I'm going to draw a basic compression here. I'm not going to draw the exact thing. Okay, so whatever you got. Boom, 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 boom. And for ease, let me actually just put this here, because we'll be referring to it later. Boo 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 boo. I must remember to stop sometime, otherwise I'll just keep drawing for the rest of my life. Boo boo boo. All right, and then price shot away down. Alright, and then price is coming back up. So what are we doing? We're going to be looking for places where we can take trades. And yes, okay, there's the RS of this. Let's just put that in and get that quickly out of the way because it's not something that I feel we need to deal with right now because we already know that stuff. Right. Okay, so there's that. And okay, let me just be a little bit more precise. Just a little bit, and then I'm going to walk away. Right. Up there. Okay. And I like a real red. Give me a nice primary red. Yes, yes. All right, this is a compression. We all know that this is a compression. Blah, 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 blah. Compression here. So for me, compression is made of two parts. It's made of pre-compression and it's made of the tip of compression. A pre-compression is... Oh, actually, I'm going to just get that. Pre-compression is the MPL before we get into compression. Now you know about compression, you know that once we get into the actual compression, we're going to get to the other end of that compression before we can break where we actually came from. So if price breaks into this, it is, without a doubt, going to find its way up to the tip of the compression. So the one thing that can stop it, yes, we've got the RS, but let's shut up about the RS. We all know about RS. The one thing that can stop price from getting into the compression is the MPL beforehand. Once it breaks this, there is nothing stopping it from going in, and it's going to go in and it's going to break through. So this is the last line of defense before we actually get into the PAZ, into the price action zone, which is compression. So that's it. Pre-compression, the MPL, let's say the high or the low, which actually begins the compression. So it is the last place we can go to before creating PA to actually get into the compression. We can go anywhere inside there and still have absolutely no PA telling us that we're going to go into the compression. So pre-compression is that. It is the place just before the PAZ, which is CP. You got me? You happy with that? Maybe yes. Yay, good, good, good. So that's it. Pre-compression, the tip of compression, and what I said to you earlier is very important still. Boop, 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 boop. Let's say here's where we broke into compression, and then it shoots away. Boop, 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 boop. Oh, let me be terribly precise about this and just show all of it. Boo boo, boo boo boo. Hey, be cool. So then when price is coming back towards these places, what do we look for in a compression zone? Here is a perfect place for price to bounce on return. Absolutely, it's why not? It's RS, perfect, great. But then again, another place is a thing that nearly nobody on earth knows about. The Academy students know about it. It is actually where we broke into compression. And it just makes absolute sense, but nobody understands it. Nobody ever thinks about this. That if PA was made to actually bring us into the compression, then we have a PAZ formed on the kink of that. So this is a really important place, and price can, no problem, without any reservations, it can reverse away from there and head off to hell or heaven, whichever way it wants to go. So simple as that. Alrighty. So that is it. This is something which I think you're going to have to watch maybe 10 or 20 times or more than that to actually have it all sink in. It's really simple stuff. Okay, hold on. Something from Greg here. Can I go over where the first target should be? In that, you're going to have to go back to the last lesson because the last lesson is where I spoke about targets. So yeah, it's in there. If I'm to talk about targets, I'm going to have to utterly repeat the last lesson that I gave. So just look through that and you will see what these targets are. Yeah, simple as that. You can change. Okay, I'm not from. Okay, can you go over where the first target should be? I'm still not comfortable at defining TG1. Oh, well, okay. I'm on here, so we'll just do something quickly. Just on this chart, fine. We've broken in here. We've broken a lower flag limit. Bum, 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 bum. Let's say we've broken a lower flag limit there. And we are looking then for a long. It's very obvious. Really is very obvious. If we're just looking for a bounce trade, where would our first target be on this? It really is simple. Now we can have lower time frame stuff, all right, but what we're going to want to do is find some symmetry. I mean, here you've got a PAZ right there, and then here you've got a pole going up through. Here you've got a pole. You want to fill that again. You want some symmetry there. So your first rational target on this is going to be this new hook. All right, come over there then, whatever. It's going to be this new upper flag limit that we've got formed. That is it. Really simple as that. And then for any further lessons on that, simply go back to lesson 1 because it's all in there. Really is all in there. Okay, so now retailers normally put stop loss around the SR line. Does that mean we should never do that? However, SR does work most of the times. We have to have a stop loss somewhere. But we've got to be very clever with our RS. We've got to make sure that our RS, let's say price is coming down to here. It hasn't gotten there yet. Okay. We've got to be smarter than the retailers because we are always trading against the retailers. So, okay. So retailers may see this as RS. In fact, they wouldn't because they don't understand this stuff. So let's just pretend that we're actually at what they would consider to be a real RS. But okay, imagine that, oh, hold on. We could do this stuff. Boo, boo, boo. Yay. Now this is RS. So the retailers are going to see this as RS and they're going to put entries at this exact point, and then as soon as price goes anywhere past it at all, they have themselves some issues. They believe that RS is broken, which is why if we've got a nice big kink here, it's very good for us and we can put our stops beyond the kink. So we have to have our stops somewhere beyond the kink of these things every single time, but we won't have it just a little bit past the actual RS itself as the retailers would see it. We have got to be clever and we've got to put it past our kink. Now, if we have had, let's see, let's say we've already had PA to the upside, then absolutely our stop loss is going to be beyond here. But if we haven't had any PA to the upside, if we're kind of gambling on our trade, no, we shouldn't be gambling on our trades, not at this stage, so I'm not even going to get into that right now. Yes, so if we've got PA to bring us back up in through there, and we'll only trade with PA, then we are going to keep our stop loss beyond the kink. And forget about the RS, it's all about the kink. Okay, if we're looking at tick charts, it is more precise to mark the levels from lower time frames. Yeah, absolutely. If you're working on tick charts, just an M5 or M15 or whatever level is absolutely gorgeous. But you've got to understand, though, that if you've got, let's say price traveled up 30 pips in a second, let's say it. Let's say you're just following local price, and what you've got is an upper flag limit from over here, and then it gets broken up. And then price shoots up. Okay, and breaks. Breaks another upper flag limit. Then what have we got? We have got, okay. Then we got a lower flag limit here. And we got a lower flag limit there. Now, we can say, now this could be tick chart or whatever, and we can say that yes, we've got price that's now coming down here, so there's another upper flag limit beyond there, somewhere up there, and price is going to get down to this one before it can break the upper flag limit, which is over there. Now that can be true, but it doesn't have to be true. Let's say there is one of those lines. Let's say you had drawn your monthly flag limits, or your monthly flag limits, and there happened to be one line left over here, and it's strong because it's a monthly. Then it doesn't matter whether you have space between this lower flag limit and that lower flag limit. You're not promised to get one of them, because what you've got here is a much more important level the price has to get through to get there, and that can bounce it. So we've got to be aware of these things. Always we've got to be aware of all of the higher time frame levels. Really, absolutely we do. So they have to be in there, otherwise we could be utterly screwed. So we do have to have them in there, because they can bounce price anytime they bloody well like. So yes, trading the tick charts and whatnot, there's often loads of space in between the zones, but we've got to make sure that there are no higher time frame highs or lows in the actual way, because they can bugger the whole thing up. You need real space. And space is not just something that occurs on the time frame you're watching. It has to occur in all the higher time frames as well, because price does bounce to the pip on these monthly, daily, weekly, whatever levels, and it just seems to turn price in the middle of absolutely nowhere. So beware of them. Always beware of them. Don't be lazy with just drawing on one time frame and expecting that to work, expecting price to go from one flag limit to another, because there are higher time frames which can turn that price. Okay. Anything else? It's quiet. Yeah, I hope I haven't shocked you all into silence. Maybe I hope I have shocked you all into silence. I think you got a lot of information there anyway, and you're all going to be itching to get the video and rewind your way through it. So we'll get that video to you ASAP, and then you can go back through it, and we'll get back into the forums and discuss this stuff, as well as discussing your homework, etc. But what I want to do in the end is start putting everything together with you guys in the forum. Tying in each and every lesson that you have learned. So okay, that is the technical side of the lessons done. After this then, it's going to be handed over to Gil for all the more psychological stuff and the actual trading methods and the likes of that. He does a great job of it, and he's far better organized than I am. So that is it. Everybody have yourself a brilliant shortest day of the year and brilliant solstice, and I shall see you all later. Thank you all so much. Boo, boo, boo. Boo, 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 boo. Yay. Bye.